Good evening, ladies and gentlemen. You're watching India Tonight with me, Sumita Karir, and my colleague Nivedna Prabhu. We're joining you live from our Delhi studios. And tonight on the show, we put the focus on the big tax reset, which is here. The GST 2.0 reform was cleared by the council after a marathon 10-hour meeting. From September 22nd this year, India will move to a simpler two-slab GST structure, 5% and 18%, with a steep 40% rate reserved just for luxury and sin goods. Everyday essentials from butter, cheese, soaps and shampoos to bicycles, small cars and household items get cheaper, while the ultra-high temperature milk and basic breads, they go tax-free. White goods like ACs and TVs move to 18% from 28%, Nivedha, and that's essentially a big boost for most of the sectors.
Absolutely. In fact, you spoke about that, but let's also talk about the other aspect, Sumita, because it's a big boost to the insurance sector. Life and health insurance policies will be fully exempt. Remember how much of chatter was there as far as that is concerned. Let's also tell our viewers that while gym, salons and yoga services drop to just the 5% category, but the council also clarified that all categories of electric vehicles, whether mass market or luxury, will continue to attract a GST rate of 5% with no additional cess. The government says reforms will ease business, boost consumption and benefit farmers, MSMEs and the middle class. In fact, the centre has also admitted it will lose revenue. This is initially nearly 48,000 crore, but expects higher demand, better compliance and stronger growth to make up for it, Sumita.
Absolutely, Nivedna. And joining us to decode the impact, particularly on the auto sector, we're now joined by Hormaz Surabji, the editor of Autocar India. Thank you very much, Hormaz, for joining us here tonight on India Tonight. A definitely big booster shot that's given for the consumption economy in the country. What are the next set of trends that you anticipate to come in the auto sector, and would companies be ramping up production?
Well, I think, it's really come as a booster shot, as you said, taxes going down and effectively prices going down. I mean, really don't, that's really a very rare occasion, a reason to celebrate. Normally, we've been, hit always by successively taxes increasing. But I think this has been absolutely fantastic. I think especially for the compact segment or the sub 4-meter segment, small cars, they have benefited the most. I think there will be that will definitely boost demand in that segment, though it remains to be seen how this will impact the absolute bottom end of the segment, which really has been struggling due to high costs over there. But I think, yes, I think, the market was flattening out. We had seen a lot of headwinds, and I think this has just come at the right time.
In fact, as you say that, Hormaz, in a sense, this is Diwali before Diwali for the auto sector. And of course, in general as well, like we're looking at this, but also the timing of this, given the festive season around the corner. Do you expect this to structurally revive the entry-level car segment, which has been perhaps shrinking for a while now?
Yes, I think honestly, it remains to be seen, because I think in the absolute bottom, and don't forget the sub 4-meter segment is a very, very vast. You've got sub segments within that. You'll see, in fact, by the prices coming down, people will be encouraged to skip the bottom rung, which are all the, the Altos, the Wagonars, the Celerios, those sort of cars, and people will jump to their first car being a compact SUV. I think that's really going to be the segment. The compact SUV segment will the one that I think will benefit the most out of these new GST cuts, GST. And I think also what one has to say that even the bigger cars, they've also benefited a bit, because if you see, the total tax has actually come down, because earlier you had 28% GST, and then the cess, depending on the category of the car. Now that's been streamlined. It's basically a flat 40%. So what was from 43 going up to almost 50% is down 40% over there. So really, I think a lot of cheer for the auto industry, and I think, it's just been absolutely fantastic.
That's right, and we'll have to see the kind of portfolio mix that companies will bring about as a result of the demand boost that they'll see, and of course, whether this leads to demand for two-wheelers, well, that remains to be seen, Ormaz, as well. But you anticipate the benefits of GST will be passed on to consumers by companies, whether it is in terms of price correction that could happen during Diwali or in terms of discounts.
Yeah, well, I think definitely the price correction will be passed on because, quite frankly, the consumers are expecting it, and that typically is what happened. Manufacturers tend to pass on the entire discount now and then gradually start increasing the prices a lot later whenever there's some sort of tax benefit that has come in. I don't see it really happening at the very, very high end, which is a luxury car, because I think what we might see is a price increase which was due because of the rupee, which is, not long ago was about 90 rupees to the euro. Now it's 103 to the euro. That was putting a lot of pressure on some of the luxury car players. Most of them are European, and I think they've had to successively increase prices. But I think this will kind of offset the weakening rupee in that particular segment. But I think also what we're going to see is that the kind of gap between the subcompact, the compact cars and the larger cars, that has increased. And I think manufacturers are going to have a quick relook at their portfolio because to have a subcompact product now is very critical. Because with the tax cut 28 to 18, that's huge. That segment is definitely poised to grow.
As you point that out, I want to circle back to the portfolio mix as well. In a sense, are you suggesting that, let's say, Honda Cities and, Fortuners and the likes of it is what we're looking at getting cheaper, Hormaz? Would that be correct to say?
Everything's going to get cheaper or should get cheaper. Obviously, the bigger cars will be marginally cheaper because the benefits are marginal, whereas in the small cars, it's much larger. So everything should technically get cheaper. But as I said, the gap between the big cars and the smaller cars is now much bigger. And that's why I think, for companies like Maruti, which have a lot of their portfolio in the sub-4 meter segment, they have maximum reason to cheer. Whereas you've got some companies which don't have too much, for example, Mahindra, they just have one product in that segment. And, all of them are above 4 meters in length. So clearly, I think manufacturers are going to be now tweaking their plans and their product portfolios going forward to have more of a presence in the sub-4 meter segment.
Right, Hormaz. So let me delve a bit deeper into the portfolio mix point that you talk about. What kind of trends that you really foresee for the auto market, or in terms of the strategies that companies will see, especially when it comes to rejigging their portfolios? Are there any particular categories that they will try entering into, and how does that really impact the overall growth of the segment and change the overall mix?
Well, right now, I think if you see the center of gravity has been the mid-size SUV segment, kind of dominated by the Creta, which sells 15,000 plus. That's really been a sweet spot for manufacturers because it's a combination of good margins and good volume. So, from a profitability standpoint, that's really good. So there will be some benefit over there. But the segment below, which is the compact SUV segment, which is actually much more crowded, much more competitive, you don't get the same volumes. But I think with this, the kind of tax reduction right now, I think that segment is poised to grow dramatically because, hatchbacks, yes, they will also benefit. But I think the hatchback as a body style is not as much in demand as a compact SUV. So I think hatchbacks, will have some marginal gains. But again, there are structural issues with that segment. So I think really it's a compact SUV segment. And to be honest, everyone is in that segment right now. There's no one really who's not there. So I think there were at least one model. Some have 2, 3 models. So I think it's quite clear that I think a lot of them are going to be looking at this space. And as I said, the compact SUV space, because again, that's where the maximum margin and profits are for OEMs in the sub-4 meter space.
Touch upon what we're seeing with the larger bikes, about the 350cc. What do you make of that? How do you see that reshape India's vehicle mix as well? And how do you think consumers will now tilt in terms of the models?
Yeah, I mean, if there's one casualty in this, it's obviously the bikes above 350 cc, as we know. And it's a little unfortunate, actually, because those bikes really a very, very small volume. I think there was no need to have a differential GST, but anyway, that's been done. So I think there will be an impact there. I think, as we know, Enfield is the one that will be the most hit by this. I think also, again, you might even see some re-engineering done. Let's say bikes which are just above 350 cc, they could have their cubic capacities dropped below that to benefit of the lower taxation. So you might see some kind of, let's say, re-engineering done of the engine. It will take time. It's not something you can do overnight, and of course, it'll have some sort of impact on performance as well. But I think, I'm sure bike makers are going to be looking at all sorts of possibilities to see how to mitigate the effect of, the increased prices on this category of bikes.
Right, Hormaz, and that will become clearer only in the next couple of months. But let me also talk to you about the EV taxation because that has been kept as it is. And there was earlier some concern that EVs above 20 lakhs would be taxed at a higher rate. But now the question is around EV adoption. If that is really the intent of the government, is this move enough to boost penetration, for penetration to happen at a faster pace in India, given the fact that, the government's targets are quite higher as far as EV adoption targets in India are concerned?
Well, to be honest, I think by not touching the current tax structure of EV taxation was the best thing the government could have been done. I mean, let's face it, 5% is fantastic. You can't really expect anything below 5%. So really full marks to the government for sticking to 5% on EVs and across the board, actually, because again, it would have caused disruptions in the whole product mix of a lot of manufacturers. If you start categorizing even the EVs, which as it is such a small segment, to sort of sub-segment it at this point would have really caused a lot of structural issues. So really, I'm glad good sense has prevailed and they've not touched the EV taxation for at all. But I think there's one fallout we could expect is that the delta between small cars and EVs has now narrowed. So I think, it might get competition. EVs could get competition from, again, compact SUVs, which were earlier at 28%. Now it's at 18%. So, the gap has come down between 5 to 28, now 5 to 18. So that could be a bit of concern. But I think, honestly, for EVs, a bigger concern for me is big bottleneck still is charging infrastructure. And I think, growth has been good in the EV segment, but not as fast as we expected. But I don't think it's so much to do with the pricing. I think it's to do more with charging infrastructure.
Harmaz, one thing I want to understand from your perspective as well, this is of course going to come into effect from September 22nd. What will that transition period look like? More importantly, because, even when we were putting this into perspective, in terms of the inventory that was also there and that was being tried to push out. So how do you see that pan out now with this particular reform? And will, in a sense, OEMs use this window to also protect margins, perhaps, instead?
Well, I think, as I said, from the margin point of view, I think they will pass on all of that or let's say the benefit to the customer. So I think there won't be too much of an impact on margin immediately. I mean, that's the trend we've typically seen. I think. And then price increases happen later on. But I think right now it's just going to be no action till September 22nd. Obviously, there has been a lag from announcement to implementation that always causes problems in the market. But I think this is just a short-term blip. We've got to look at the bigger picture, which is it's just amazing that GST rates have come down for cars across the board, and I think that's that's absolutely fantastic.
All right, Hormaz, thank you very much for taking the time out and speaking to us here on 80 Now. You're suggesting that there may be discounts in the near term which consumers can take advantage of. However, there could be price increases later, but at least consumers can take advantage of these discounts that could be offered by companies in the near term. Thanks very much once again for taking the time out and